Oil faced a new round of sell-off in the morning trade as weak oil demand continues to weigh on the market. Yesterday, the ruble held steady amid a moderately negative background. On Tuesday, it continues a positive trend. However, the ruble is unlikely to rise further amid the lack of strong fundamental factors. The vaccine news spurred a rise in risky assets and offset worries over the weak fuel demand. Thanks to this, Brent approached the level of $50 per barrel. But today, positive sentiment gives way to fears over the coronavirus health crisis. The situation is especially difficult in the US, where the resurgence of new cases forced authorities of some states to impose tight restrictions. Some experts assume that the spread of the coronavirus may accelerate after the Christmas holidays and may become even more intensive than after Thanksgiving. Iran is another reason to weigh on oil prices. At the moment, the country is getting ready to return to full capacity production and export of oil. Given that the energy market is under pressure and suffers from oversupply, this can be another hard blow to the industry. Iran may start to supply oil within 3 months after the expected easing of the US sanctions. It's known that the US President-elect Joe Biden supports the resumption of the nuclear deal with Iran. The energy market is still vulnerable to low fuel demand. Today, Brent oil futures for February edged lower to $48.50 per barrel. WTI futures contracts also fell below $45 per barrel. Despite negative dynamics, oil quotes are holding at comfortable levels near multi-month highs. Besides, oil bulls are trying their best to maintain control. At the moment, they are pushing the price slightly higher. In the day trade, there was an attempt to send Brent above $48 per barrel, but it was not successful. In the next 2 days, investors will focus on industry data from the API and the US Energy Department. If reports show a rise in crude inventories, this may lead to a new sell-off wave in the oil market. On Monday, the ruble made a short upside breakout and almost reached the level of 73 against the US dollar. Later in the day, it bounced back. This short-term uptrend can be explained by a speculative purchase of the Russian currency by non-resident companies. Today, the ruble continues to rise, aiming at the 73 mark against the dollar. However, this upward movement is not supported by any fundamental factors. Besides, the dollar-ruble pair looks oversold and is about to enter the phase of correction. A moderately negative background is not favorable for buying risky assets. The threat of new lockdowns is the main factor to limit risk sentiment. Some market participants are skeptical about the current strengthening of the ruble. If traders start to take profit on long positions on the dollar-ruble pair, the ruble will quickly give up all its gains from November and early December. Amid the worsening outlook for oil prices, the ruble has a slim chance of extending its growth. Therefore, the dollar-ruble pair may again return to the level of 77. That's all for now. Thank you for watching and stay tuned.